All right, good evening, guys. Ken at Tortoise Capital weekend strategy report for Friday night, January 12th, 2024. Welcome to the three of us. I, I don't know. Appreciate you guys showing up. We'll start with hybrid workshop, 30-minute charts, Alcoa. It gapped up, ran all the way to the top, and then sold off hard. At the collapsing dragon, I initiated short with a standard risk, 2R. AI, the same thing. We're going to see that feature a lot today. That yesterday typically, closed, and then there would be a gap up and a big run up, and then a harsh sell off, then a long slide, and then a recovery, either stabilizing or recovering strongly. So we see that as a standard pattern today. So this one gapped up to here, sold off hard, shorted when it crossed the dragon, standard risk. Didn't want to hold it over the weekend, so capture another 2R in AI. Caterpillar, no trade. Cliff, no trade. Those were both intraday trades. I'll show you those in a minute. Disney was a big gap down, harsh sell off, and I bought it after the R10 reversed and covered it at the edge of the dragon for 3R. Sorry, that was CBS. Sorry, CBS was a gap down. Disney was a gap up and go, and then faded back to the dragon, so we captured 1R. Devon Energy. So this one was interesting. 2 days ago, we initiated the short, and it closed well, like right here. Then yesterday, it opened here and then continued to roll over. So right here, we made a decision to hold it overnight, hoping to see third day of gap. However, it reversed all the way up into here and turned about a 4R win into a scratch. And then, like the rest of the market, it started selling off again as it comes down. So I just reinitiated the short here with the same standard risk, and then that one sold off hard, added a second position here, and then covered everything there. So when we rack it all up, it's still a good one-day trade because this one made 6 and this one made 1. But it did lose the 4 that were held overnight. So the revenge trade worked out pretty well. Emerging markets, no trade. This is one, however, after that nice big gap up, as is typical in EEM, it did have a harsh sell-off and then went flat. So there was a tradable move inside there, just span of control issues. Ethereum, no trade. Mexico, this was the end of a 2-day trade. So yesterday we initiated the COTA 2, or you could call it an SSC, I suppose. Today it continued to work. Then when it came back and connected to the dragon, after the R10 rolled over, we exited for 1, 2, 3, 4, about 5R. Brazil, same thing, only in this case, this had a much greater, here was the close yesterday. It opened up here, so a favorable gap, and then ran all the way up, and then in the same 30-minute bar, started coming down, so I just cashed it there. Missed this trade, but was happy to take and get the favorable move to there. So that's about 4R, and was happy to get out of that one. Intel, this is one where we held it overnight. Here's where it closed. It gapped down to here and started selling off, so we just closed it for 1R. Missed the follow through, but it was span of control, had plenty of other. And then there was another rebound move inside here. So Intel was very tradable today. I just didn't get any of it. IP, this is one where we closed it yesterday, and today it gapped up all the way to here, had a momentary run up, and then started dropping like a rock. I was already fully loaded and span of control, and so I ended up missing this trade and then missing that trade. But IP traded like a growth stock today, for crying out loud. Just another reason to stay with it. Real estate, late in the day, there was a kind of an orderly, there was a gap up, sell off, and then an orderly recovery. And so speculated in on a 1, 2, 3 entry and cashed fraction. Coca-Cola initiated a COTA 2. We're holding about 2R overnight. Over the weekend, I like the fact that it cleared the previous support or resistance level, made a new 30-day high. So I'm gonna hold that one. Regional banks, big gap up, harsh sell off, shorted it, and then entered the dragon. Standard risk, took the dragon exit for 1R routine. McDonald's, we closed yesterday's 1, 2, 3 entry. It gapped up and then started selling off, and I exited when it hit yesterday's high. So we cashed 1, 2, 3, 4, and very little follow through after that. Merck, no trade. Microsoft, yesterday's 1, 2, 3 entry we held. This thing just continued to grind north as the world's most valuable company. We're going to continue to hold that one. We got about a cushion of 5R on that one. This is one in marijuana. It was a gap up and go. So tried it, exited at scratch when it came back, and then missed the re-entry. And it closed really well, but there's room for that one next week. But that was one that would have paid off in late afternoon trading. It was just no zero state left by that point. Exited the 3-position move in Nike, the big trade, and then it stabilized here. So I'm actually thinking that's going to be the next basis of support, and I'm looking for breakouts next week. Nvidia, no trade. Clean energy, no trade. A short was available. Rivian, thought about the collapsing dragon, didn't take it, and then missed that move. The S&P, yeah, so this was characteristic of the whole market today, where it closed here, gapped up, had a quick run up, and then sold off, and then recovered, and then stabilized. So this was kind of the primary money-making move of the day, was big run-ups and then intraday collapses with some recovery. Treasuries, no trade. It also featured a really nice sell-off intraday. Tesla, collapsing dragon short, standard risk, 2R, no overnight risk. Walmart, still holding the 1, 2, 3 entry from yesterday, and I'm just cruising along with that one. It closed really well, but my thought is that there's still a lot of buying interest in it, and it's still well above here. So I'm just going to maintain that position as a core swing position. I continued to miss moves in U.S. steel. I get a little bit terrified by the intraday movement in there while Congress is still monkeying around with. I think it's just very, very vulnerable to political news, and and there's no telling which way the market's going to react. So I'm just standing aside from that for a while. We're doing some research with EdgeRater on the gap stat, and Phil has been working with Chris White, who's the developer of EdgeRater, and what we were doing was checking the gap stat. And the bottom line is that they checked if it was much quieter gap than normal, so abnormally small gap, then the standard follow through from open to close, they just set that equal to 1 as a standard unit of gain. And so when you had extraordinarily large gaps up and extraordinarily large gaps down, you got much bigger, almost double the size of the follow through from open to close, which just confirms, and that's over 6,000 day period. So we're talking 30 years. A 30-year study of the gap stat basically finds that large gaps lead to large follow throughs, measurably larger follow throughs. So the standard practice of find the movers early by looking at your stack of symbols, sorting it by percent gain from yesterday's close, that will always throw the large gaps to the top and the worst gaps to the bottom. And it is from those two pools that you're going to get the biggest follow through. We just don't know which direction. But what that really says is if you have a close here and a big gap up that you can and should put risk boxes around it and then play the breakout from your MMRBs and then get your risk out of it quick. And that's a reliable technique, whether the gap is large to the upside or large to the bottom side. What it means is that the absolute size of the gap predicts an abundantly large move. Now we're going to do some more work on that by studying 500 symbols in order to find the best performers in the gap trade. And that will be the ones that are consistently outperforming the market in terms of gap directional. So, so there we are. More to follow on that one. I expect that's going to end up being its own workshop for hardcore intraday traders. All right, so some sniper trades of the day. There was a lot of activity in the morning. So here's one in marijuana, and this was an afternoon trade, and we had a long sideways quiet channel, then an alert, and then the big breakout here. And I basically treated that like an OR3 after lunch. And so I bought this breakout. This is the size of our standard risk box, and it was so close to the PSAR that it just felt like a natural place to put it. And what we got was a huge run up. And then a sell off for about 2R. So it ran up all the way, came down 2R. And then it stabilized into this sideways channel here. And what I want you to notice is you're getting this is a breakout above the PSAR, and that's going to lead us into the next chart, the second part of this trade. Which is this is where, when we zoom in on that now, this is where that RL10 comes through the dragon. There's that first bar that completely stepped out of the dragon, so I bought this right here. That's also a 10-cent risk box. It zoomed in so it looks a little bigger. And ended up getting a little bump, and then a no lose plus dinner for 2. And then it closed. That was just in time to miss the move up. So there was just no follow through on that. They don't always work, but that's one where I'm willing to take that shot. And it was just a little unfortunate that the end of the day selling pressure produced that little quick sell off, which got us out to preserve the win. And then it reversed and went all the way back up and just missed that move. But I was out of emotional energy by that time. This is one that also happens around the lunchtime period, and this is Cliff. So this is something I'm always interested in. Here was yesterday's close. Here was the big gap up. There was a tradable move to the upside, and then it just kind of stabilized into this grinding sideways move, which was well below the VWAP. And so in the lunch hour, I started looking at this and I saw the alert from the PSAR flip. So I started stalking it. When I got the breakout above Bollinger Band mean, I'm looking to see leg 1 get to the VWAP, leg 2, the top of the dragon, leg 3 to the top of the RL10. So I see that as leg 1, leg 2, leg 3 as possible moves. And the rest of the market is starting to work at that time. And so by this point, 5 bars in, I should have my risk should at least be to here. Instead of playing the PSAR trail, this is one where I can play it right here and see what we end up getting. Standard exit at the PSAR dot for about an R. Caught a 2 re-entry, same standard risk, scratch, and that was good for the day. So that picked up another R or so with the intraday grind. This is in Disney. So this is yesterday's close at 4 p.m. right here. Disney opens up to here, reverses, and then it runs all the way up and then closes here. So that now establishes the OR3. When it breaks out, I buy it going long. I'm putting my standard risk box on it. So there's my stop. It's now rolling over, so I take the dragon exit for an R. That's what 1 R looks like. I thought about caught 2 re-entries right here. It was still early in the morning, and so either one of those 3 entries is justified as a caught 2. Just depends how much you want to give for confirmation. The key point to me is like when this segment the RL10 goes into the upside. This is like the earliest I can get in. I'd like to get in here. That's not later than that moment. There was actually a tradable move after this. But the point I want to show is that I like to earn an R And then I can think about, reinvesting it in one of these continuation patterns. Once I see that I have a kata 2, which is a successful trade plus a higher low, and it didn't spend much time out of the dragon. Like it exited the dragon here when it rolled over, and then 3 bars later, it's already coming back in. And in a little bit, another bar or two, it's going to cross the dragon. So I feel justified in entering here or here or here, particularly because I got the +1R from this trade just to put right back on it. So I can think of that as market's money. Here's one in Caterpillar, again, 3-minute charts. This was yesterday's close. Here's the strong gap up to here. It rolls up and then comes down and then slowly starts decaying. And now notice that the VWAP is sliding down. The R10 rolls over. The R10 enters the dragon. The PSAR flips. And now we're hitting a new low of the day because the gap up was to here. So my first inclination is that it's going to come back to here. So I'm short here with the standard risk box. Check or hold. And that's a standard exit right there. Why? Because it moved 1, 2R in my favor, stabilized here. The R10 reverses from down to up. So now I'm happy to just take the skin of the dragon as the exit after I get confirmation that the R10 has reversed. So I don't exit when these little touches are being made because the R10 is still predominantly downward. And my stop is the PSAR. But once the R10 rolls up, then my stop goes from the PSAR down to the edge of the dragon, and then I get out. Check or hold. Pot 2 continuation. You could also think of that as a collapsing dragon continuation because it's so close to here, and you're getting a lower high after a successful trade. That makes this either a collapsing dragon or a Tata 2 to the downside. You got the PSAR is sloping down, the river is sloping down, the VWAP is here and sloping down. So I'm setting my stop to here and taking that short. Check or hold. Once again, the R10 reverses, so I take the dragon exit, and that's about an R. This one was about 2R. So we're at +3 right now. Missed a Kata 2. Probably would have scratched. But 3R in the morning from that series. Here's one in Alcoa. Again, 3-minute bars. Here's yesterday's close. Here's the gap up to this level. It ran all the way up and then all the way back. It stayed inside the OR3 until the 3rd bar when it broke out to the upside. So I put my stop in, make my little entry, and up we go. We hope. It reverses. The R10 is rolling over, and I just cash a no lose plus dinner for 2. I'll take a 0.3 win on the first trade. Now I'm interested to see how far this thing is going to roll over because the R10 is up here. This is an example that um, at key turning points in the R10, you can actually get a significant deviation between price and then the R10 representing price. It falls through the dragon below my original entry, so I just get short with the standard risk box. So I'm short here. Here's my risk box. And what I'm really looking to see, if it breaks down below here, then this thing could be a big runaway freight train. It helps on the short side that the first bar down goes to here, so I could actually get my stop to here if I wanted to, and then lock in that little gain. Nothing wrong with that. Get my risk out. Staying below the Bollinger Band mean. PSAR's trailing nicely. Notice the drop in the VWAP right here. When it drops from here down to here, there was a lot of selling pressure right in here. A lot of volume transacted. But then price refuses to drop any further. So I take the exit for 2R and call it a day. So a lot of nibbling and grinding today and trying to take advantage of all the movers from the big gaps and then the large initial moves. All right. This was David from yesterday. He posted this after we started, so I didn't get a chance to see it. But he brought home 4.5R yesterday, doing a nice job in this cascading red Niagara. Robert Gardner used to call that a 1 bar high to preserve. So we made that capital preservation on the second trade, which got 2 positions in, and quick scratch, a couple shots to the short side and the long side, and then finally this one paid off. And he played that one just as nice as you could want, staying very adaptive to the directionality and doing a good job of picking up the turning point here. Moving on to today, -2 initially from Ilker on Intel. We need to be more mindful of the direction of this. There's a couple longs in there, and every indication on this is short. And we got to hit that reentry. This is a good Kata too. That one's pretty good also. There just wasn't a lot of follow through with that tight of a stop. As long as this is above the VWAP, you can have a long side bias. And noticing that the PSAR holds, you will learn to have more confidence in that one. Quick scratch in EWZ. There was more available here, and we were slow on the reentry. But a good job on that exit. I really like, and then staying out of the chop. It's good practice. When this one after a huge gap and this one fails, I think you got to get this earlier. I showed you the earlier study on the side. Big gaps produce big follow throughs. When you get a big gap and a sharp reversal and that R10 rolls over, instead of being short here, I think you can be short up in here and you'd be very happy with that trade. Yeah, late entry on the collapsing dragon over here. And you did at least get the re-entry in there, and that's pretty good. So not a bad day on that one. 0.6R in the usual way, doing a good job of picking the directions in here. Late on getting in on the SSC. I think you got to respect this line here that looks like an RL 270, maybe. Hard to see. Yeah, but this turning point here happens winter, spring, and now the summer happens right here. We should be able to hit that because we had a chance all the way through here to be stalking that. That's failure to fail. You got a PSAR flip. We should be able to nail that right after lunch. Uh, George, this is on the 30-minute. I think. Yeah. Yeah. Amazon, not a lot of follow through after 5 days of extraordinary moves. I don't find Amazon as tradable as the other one. That's I've dropped it from my swing portfolio. I just it's too large to be volatile enough to follow through. I'd rather actually see you practicing on like International Paper and Caterpillar, which are much more narrowly focused and have a lot better tradability in my view. Amazon is nowhere near the top of our trading value stack. So I don't really like it as a target. Um, the break of the VWAP and then the break of the Bollinger Band mean is a real indicator, except it's ETHE, so we can't trade it. But that's an indicator for the new Bitcoin and Ethereum ETFs once they come out. So we'll be able to trade those later. Um, Reasonable shot here. Great exit. The COTA 2 was here, the SSC paying attention. That was sort of a theme today. 3 chances at COTA 2s. More chances at COTA 2s. When we finally did them, we got a little traction. This is David. Let's see. So we're short from, was it 224? Yeah, we're short from off the chart. And then it opened today. I see what that is. So yeah. We already had one position. This was a continuation. So we got short and then added a second, exited everything, re-entered and made some of that back. Yeah, I'm with you on that. The skip in the second position is wait to see the follow through after that opening 30 minutes, because then you'd end up getting where I like to see it is if the first bar closes here and then the second bar opens and then starts suffering right away. I like to hit that right away on the 30-minute bar instead of waiting for the breakdown below. But still, that's not a bad place to have put a second position because then you get a really nice payoff here. So good learning point. Um, so he sees the big gap. We see. So you put a stop in to preserve yesterday's 2R, which is here. So that's the preservation, and that's the big gap. That's this big gap. This this exit preserves more than 2R, and that's this one. That could also be, by the way, the short. I think I wasn't in McDonald's, but I took one like that where you get to preserve, and now the bottom's dropping out of it. But I appreciate, having a long side bias on this because you still got the favorable piece, and that's worth a shot. So I like the theory behind the practice there. Late morning on TNA, reasonable entry after the PSAR flip. I think, that's probably a 0.5, or if you're basing your stop off the PSAR flip, that's 0.5. That's a good, that's actually a little bit late on the entry because we could actually get short up in here now when the PSAR hits. Still not bad. And then I think after this turns, I think you're a bar late on the exit and probably a bar late on the re-entry, which now makes this a losing trade instead of a scratch. So there was a little bit of timing in that one. All right, that's that. Let's hit the reports. Still at 100% on ETF2. We're bullish quiet, overbought across the board. We're loaded up on the things that are dominating right now. Latin America and tech and real estate's actually doing pretty well. Volatility's favorable. Um, all four of the regression lines are favorable. They're sloping up. So the 270's up, the 90's up, the 30's on top. So this was a tactical pause in the 10, but the 10 has come through the dragon and is now looking to make all-time new highs. So if it gets above 475, 477 with the RL10, then this is going to be amazing to the upside. The 3-day and the 9-day both look great, well above the previous resistance levels, and everything's favorable. And the slope of the 10 and the 30 are both up. This is the 150-day look back, pushing the 150-day high today. So that's fireworks to the upside. Pretty strong day, much higher low and a reasonable exit. In spite of some profit taking early, it still held up pretty well to not commit panic selling at all. And the recovery was reasonable. Blended monthly rebalancing. The winners continue to win. Real estate, diamonds, tech, Latin America, all looking really good. Tech is really leading the way with 3.23. XLK is even better. So that's telling you that old school tech is beating the NASDAQ tech by a considerable number, which has been the trend for at least the last 6 months. If you compare the 1 week, 1 month, 3 month, and 6 month and the blend, looking at XLK versus the Qs, you'll see that old school tech is stomping new school tech. Only energy's in a selling position when we look at this. Sorry. Yeah, only on the ETF 22, only XLE is in the negative underneath its 4-month moving average. In the Dow, big winners this week: IBM, Home Depot, Microsoft is just a clear winner. That's going to continue to dominate. Intel's doing really well. That's an IBM. That's your old school tech right there, doing well. Boeing is just getting smashed. In the ETF Max, the home builders leading the way, but had some sell-offs in the finance sector. You see regional banks, big banks, and even biotech suffered today after what's been a pretty good run-up. World market model, all of the US is above average, real weakness in Asia, real strength in Latin America, Mexico, Brazil. Yeah, Mexico and Brazil dominating here, especially Mexico with a green and white, green under strength and white under the consistency. It was good. Now it's great. A chance to exploit new strength. So let's keep that on our short list. Shift to the daily real quick. The Dow Tactical Summary, big breakout today in Travelers. Some give back in Devon Energy and Boeing, and even in Tesla, is not participating in the upside. There's slogging. Big wins in the ETFs in Japan, marijuana, and uranium. Yeah, some give back in clean energy. Lots of auto framers to choose from, as you can see in the auto framer. Lots of things better than 2-to-1. Buyer's market. I like Intel, IWM, and Nike on the continuation. And just a handful of squeezes, which includes XLK and Merck. Both of those are good opportunities, as is Walmart in a bit of a squeeze here. Microsoft in a squeeze. Boy, we got a pile on that thing. In the Four Seasons, still being dominated by the fall and the summer. Just a few real laggards among our individual companies: Tesla, Devon, and Boeing. And real strength up here in old school tech, plus old reliables like Coke, Walmart, Home Depot, Microsoft. That's where the safety in it is. Now on the frog list for trading value, marijuana, Tesla, clean energy, Intel, Boeing, Devon, oil and uranium, metals and mining, and Texas Instruments. That's should be. They're giving you reliable intraday volatility. All right, fellas, that's everything. We'll get it published and posted. Thanks for your kind attention. And we'll see the storytellers in the morning, see Foundations Q&A Sunday morning. We have small group coaching Monday night, next round of the book club on Wednesday night. So take good care, and we shall see you soon.